Hey guys, how's everybody doing? Hope everyone had a good day. Let's check out the market, see what the market did today. Okay, here we go. I was looking at GPTY, so this one, I guess it doesn't have a price yet. Oh yeah, it does. It was up 34 100ths, 34 basis points. Or actually it was up 34 cents, which is actually 71 basis points. That's pretty good. Nearly 3/4 of a point. We'll take it. All right, let's see how the market did. There's the S&P, kind of drifted up later into the day, then kind of sold off a little bit right during the last half hour. These are half-hour bars, so that's today, that's yesterday, that's the day before, that's the day before. We'll check out the NASDAQ. Same thing, half-hour bars. Same thing also, there's an area of overhead supply where there's sellers, evidently, where there has been sellers. I'm not predicting there's going to continue to be sellers there, but anyway, this area is indicated by the red. So we'll see. It'd be the bulls are trying to get the price on the other side of this and negate this area. And of course, the bears are trying to do the opposite. The bears are trying to send it as low as possible. So it's a battle every day. Now, Russell actually had a bullish gap up today, and neither of the other indexes did. Now, later in the day, it returned to the gap, but the buyers appeared because that's a tell. That's a rejection tell. The market closed, out of the gap. So in any event, that's interesting. So basically, not a lot happened today. Russell was slightly bullish, maybe, and the other ones were maybe slightly bearish to neutral, maybe bullish at the start of the day, bearish at the end of the day. All right, well, Bitcoin rules everything, so let's check Bitcoin futures. All right. Now let's check volatility. So Bitcoin's not really doing that much. Volatility has been selling off lately, and that's a good sign for the market. That generally happens when the market rallies. But volatility did pop just a little bit at the end of the day, but doesn't appear to be anything major. In general, people are taking off hedges, it appears, for the past couple of days. So we'll see if that trend continues. We can also look at interest rates. And interest rates are generally trending down also the past, however long that is. Just there's New Year's Eve right there. So that right there is mid-month, January. So the second half of January, interest rates have definitely pulled back. Interest rates reached a high of almost 4.8%. Now they're down to 4.5, and they've been trending lower. Right at the end of the day, they did pop a little bit, but also right at the end of the day, the market sold off. So let's look at Alti, Jeep, and all those Altiverse, all the verses. Okay, which verse is it? Boy, this is the Altiverse. Are you serious? There's no way this is right. I guess. Yeah, we're going to check that. We are going to check that. That is awesome, though. Really shouldn't surprise me with the Russell gapping up today. Alti's probably most similar to the Russell out of the three indexes. It's probably like a mix to the Russell and the NASDAQ, the worst qualities of each one of them. But in any event, Alti bounced back, and it almost got back to the scene of the crime. It almost got back to where it was right before we sold off the other day. So we shall see. But yeah, sure enough, this has Alti plus 1.28. And this has Alt-D. I don't know why I always have to check it. It's just because, yeah, it's right this time. Google is just so unreliable. Okay, but so this is right. So this is great. Alt-D killed it. Look at this. They only have a couple of funds that are down. How come DJT's the only one down? I mean, you hear he blamed the plane wreck on DEI. Anyway, plane wrecks are serious, and it's amazing how safe flying has become, how much more safe flying has become since the time when I was a child and in my teenage years. DC-10s used to go down all the time. It was a great plane, a big 3-engine monster of a plane, but they just weren't that reliable. And they used to have mid-air collisions all the time. Technology has solved the mid-air collision problem for the most part. So that was too bad. That was really sad what happened last night. All right. But I can't think of any reason for DJT to be down. MicroStrategies is down, but for MicroStrategies being down 34 bips that's like being flat. Same thing with Netflix being down half a point. Anyway, we'll take that. That's nice relief rally. Let's see if LFGY is doing the same thing. Here's the LFGY verse. I have it over here on a different chart. Let me see. Oh, there it is. All right, LFGY. So look at this. LFGY is up 2.5 with only one thing down. That's incredible. All right, let's go back to the charts. This has LFGY up 1.3. So in any event, 2.5, 1.3, whatever. That's awesome, right? Anything more than 1% gets my attention. I mean, that's that's crazy. All right, the Google Sheets is behind, and like I say, and it's unreliable. So I'll try to figure that out before tomorrow. All right, so this is the allocations of LFGY. Biggest allocations are MicroStrategies, which is down a little bit today, but Coinbase. Anyway, these are all the allocations. They don't have much cash or very many dollars in money markets today. Almost no money markets and less than 3% cash. Okay, so now we'll go over to the GPTY verse. Okay, here's GPTY. And this one's kind of my favorite of the three, but this one did not do the best today. Look, this one was up 1.12. Now let's see if that's correct. I think this one especially isn't updating because of Google. It's actually up 0.71. GPTY, okay. Well, all right, just imagine that says 0.71. It's not that big of a deal, but it's close. Whatever, so we can, oh gosh, you got to be kidding me. Oh, that's what it is. Okay, the average really is up 1.12. That's absolutely correct. This one is the one that's really up. This was from the other day when it was down, and it's not updating. So disregard that and pretend like that's up. So we're really catching about half the upside, which is totally normal. It's what we'd expect. The ones that are hurting us are ServiceNow, Microsoft, of course. It had earnings and people didn't like the earnings. ServiceNow, and also what's CRM? CRM is Salesforce, of course. Amazon pulling back just a little bit in Apple, but a lot of bright spots. Arista Networks bouncing, thank goodness. Broadcom bouncing, so is IBM. Jay did a lot of, as the market pulled back and got more volatile, he laddered a lot of these strategies, and he prepared for a sharp bounce back, let's just say. And I think that they're capitalizing pretty good on it. I mean, I would like to see this fund up more than 1/4 of a point or 3/4 of a point. It's up 0.70 right now. But I mean, LFGY is up 2.6 right now. You know, they're all similar funds. That's why I talk about them together. And Alti's doing well as well. All right, so now let's just talk about the index buffer report. We'll see what's going on over here in index land. Feet 5E, I'm going to guess they're up the most. Oh, SEPI and LFGY. This got to be feet and 5E. That, yeah, feet 5E. Okay, we'd expect that, and that's really cool too. That is really cool the way they beat the indexes bad lots of days. Badly. Look at these fire branded funds killing it. That is a highly underappreciated fund. Look at iSpy. I made a video today and I was talking about my favorite funds, and I was saying if you don't want to take as much risk, iSpy, KQQQ, T-Spy, whereas if you're fine with a little more risk, YMAX, YMAG, feet, the usual suspects, ALTI, GPTY, LFGY. All right, well, look at this. And I also mentioned XFAL specifically in that video. If you guys haven't watched that video, go watch it. It's called How Much YouTube Pays Me for 368 Subscribers. But I was just trying to think of an excuse to make a video. I mainly talk for the last 15 minutes. I talk about covered call funds and covered call strategies and what I think about them and that kind of stuff. All right, so look at this: the Defiance Fund beating the parent. That's really good. But of course, so is Roundhill, and Roundhill's beating the parent a little bit harder. Good job, Roundhill. Roundhill's a hell of a fund. Hell of a company. Here's SFAL doing a good job. FEPI doing a nice job beating the parent asset. SEPI killing the parent asset. LFGY is just on fire. AIPI looks really nice. Look at this, people. This is an underappreciated fund as well. Triple QY, it's beating the parent badly today. Badly. And I'm sure QDTE as well. So that's good. They're both beating the parent about as badly as the other one. YMAX and YMAG just spanking the parent. GPIQ, the Goldman Sachs NASDAQ covered call fund, doing well. ALTI doing well, beating the Russell, which is impressive. So Russell had a big day today. ALTI's the only thing that was beating the Russell. The only thing that's kind of based on the Russell that's beating the Russell. XOVR is also beating the Russell, but I would say it's more based on the NASDAQ. More based on tech. ALTI, because it just chooses the hottest messes available out of any, just IV wise, they go for the highest IV. So those generally, they can be bigger companies like in NVIDIA, but lots of times they're Russell 2000, Russell companies, that size. All right, so now let's look at the yield max buffer. Look at Tesla or Tesla beating the parent. I love that. OARC beating the parent. SMCY tying the parent. PyPy beating the parent. Dizzo's beating the parent every day lately. The Dizzo manager's killing it. No one will ever know because no one cares about Dizzo. It probably pays a consistent, 20% or something. I don't know. I don't care about it. But somewhere there's funds in here that people know about, that other people don't know about, that are very consistent and lose very little, have very little problems with NAV depletion. And there's people that are invested in them happily. You just never hear from those people. Those aren't the kind of people that share their experiences. Anyway, AMD's been a mess lately. All right, well, all right, how are you guys doing? I was going to see who all's here. All right, we have Red Sox here. Hey, what's happening? Yeah, I'm doing great, Red Sox. Yeah, disappointed in GPTY. Yeah, bought more LFGY. Yeah, it was a military training flight. I know it. I heard all the same stuff you guys heard. It's just, man, it's so sad. So sad. Anyway, I was just trying to think of a reason why DJT would be the only one down, and because everything else was up, and that's not a reason. I was just trying to think of I just say whatever comes to my mind. All right. Hey, let's do the Philippines. Good to see you here. Good to see you here. I'm just checking up on who all's here. Or let's do the Philippines. You're thinking about moving some funds around and maybe into LFG. Well, just because LFGY had a good day and GPTY didn't, I mean, it's just one day, but boy, LFGY did have a great day, and GPTY had a less than auspicious day. But I always go back to if the market would have crashed the other day, and it didn't, but it came close. It's these. Well, I look at technicals in the market. There's some levels the market will get to, and it sells there. It'll just keep selling. It won't mean revert. And it came close, I think, very close to that level the other day. And someday we'll get to that level. When we do, funds like GPTY will have way, way less downside. The other ones will be down 7 and GPTY will be down 3. But it's going to be on the counter is on a good day like today, the hedge is probably causing drag on it. So it's going to underperform something like LFGY, which is just full steam ahead. This may be an unpopular opinion, but I'm going to lobby Jay to start doing the hedge on LFGY, or I wish he'd do it on all of them. That's just such an easy little, hedge. It only costs 1% a quarter. It appears. I mean, we'll see how it works, but we'll see how it works. But I'm enthusiastic about that. Obviously, did you guys do any earnings trades today? I was going to turn on. I was going to see how the earnings went. Let's see if Visa or I think Apple had earnings after the bell. Let's see if any of them reported. I'll look here on I tried to turn on the TV, but for some reason it didn't come on, or I was trying to watch CNBC. It's just so bad I have to turn it off. Usually I watch it in the morning until Kramer just makes me too aggravated, and it's usually turned off by about 8:15. But then lots of times something happens and that I miss, and then you guys are talking about it. But anyway, we're going to turn on TV right now. So after the close today was Apple, Visa. Oh, Intel. I forgot about Intel. Adidas, KLAC, Boot Barn. Do we have any in the morning before the open? Oh, ExxonMobil. Okay, yeah, that's going to be a boring snooze fest probably, but it might affect the yield max funds. Colgate, Granger. This one might be a mover. You never know. ABBV. Okay, so let's go. So let's see what happened. The TV still. One thing about apps, I do miss old TVs, how you just turn them on and they were working. It's one thing that I don't like about the app. If you're in another app, you have to go between the apps. I wish that somebody would integrate it. YouTube TV has kind of done it really well, I think. But anyway, we have something called a TCAS, Traffic Collision Avoidance System, that I think came in about 20 years ago. It's mandatory for all planes, big ones and little ones. And I think it's really mechanically done a great job at separating traffic to the extent you can. I really think in some corridors like New York and DC and probably LA and Chicago and Atlanta, there's so much air traffic around the airport that the systems help, but there's also, it comes down to the human factor. And it comes down to the human factor. So anyway, let's see, Apple, what are they doing? Did they report yet? I'm trying to find out. Apple earnings right here. Look at this. They beat estimates 15 out of 17 times. They're a professional. January 30th, 4:30, which is 3:30. So yeah, they should be out. But I don't guess it's out yet. So let's look. Maybe the TV will say something here. Now they're on commercials. All right, Apple. It says post-market 236, but that's only about a 1 point. It probably hasn't announced yet. We'll see as soon as they get off this Toyota commercial. Yeah, just have estimates out. All right, well, that ought to be pretty interesting. See if Apple announces, and then we'll see if Visa's out yet. Oh, look, Visa's actually up in the post-market about $1 or something. Now we'll see what it says here. Have they announced yet? Surprise! They surprised. Bingo. All right. Well, maybe this trade will work out. I've been suggesting a few trades. I suggested one in Microsoft yesterday that was a dog. The trade was all right. Microsoft just didn't cooperate with this. We need the stock to either stay stable or go up. It just can't crash. Anyway, this one in Visa, I suggested one in Visa, and this one in Visa will probably be all right because the stock is stable. It'll probably open in the morning where it was or slightly higher because it's a surprise, and that's kind of the way my earnings trades are designed to work. But we'll see. We'll see tomorrow how they work. Let's see if Apple's out yet. Hopefully this Apple doesn't crater. Look, post-market is actually up now. It's at 237 now. So, they're probably fixing to announce it. You can tell I'm from the South because I say fixing. All right. Well, let's talk earnings trades. And then I'll answer a question or two if you guys have any here. I'm going to look back at the questions now. Dan's going to buy an AI robot to walk your AI dog. Yeah. Did you guys see that video today? I mean, it wasn't great. My channel's just not been doing great. So I'm trying to think of, videos. I have a new one coming out tonight also that you guys will like more than the robot dog. On LFGY, buyer's regret. I get that. On SGov, I haven't studied SGov. I mean, I know what it is. I've seen it, and I may have read the prospectus, but I've read the prospectus on so many of these, I get them all mixed up. There's a bunch of similar ones there that do really safe type stuff. That's like cash equivalent type stuff, but they get a little yield on top of the cash equivalent. My favorite one is Riser because it kind of has a built-in hedge on the economy going bad and rates going up. But if we are truly going to be in a cycle or rates are going down for the next couple of years, I think the jury's still out on that. But if we are in one of those, maybe Riser's not the best one for you. I don't know. I just know I don't know enough to make a judgment on SGov. Maybe I should do a comparison. Do you think it's good to diversify cover? Yes, I do. That I do. Now, and I just think in theory, now I don't know, next year oil could drop to $20 a barrel and then no. So it would have been bad advice to diversify into there. But I just think without knowing the future, it's good advice to have less correlation. If you have QDTE and you have Bali and you have FEPI and you have LFGY, you have all the same. You're just getting the same stuff in different packages, which is fine as long as that stuff does well. You know what I'm saying. So, but instead of that, it's great to have LFGY. But let's say you have LFGY and then you also have GDXY, just because it's non-correlated, not for any other reason. It's just because it's non-correlated. You can have about 10 of these. So you could throw in some, I would throw in GDXY for some non-correlation and USOY. But then also people don't like to hear this, but also TLTW. It may not be the greatest fund or whatever, but I mean, if you're trying to get an income and trying to get exposure to different parts of the economy, I think TLTW could be a tool. So could Riser. Riser is what I would look at if I was anticipating rates going up. So pull up a chart of Riser. Here, check this out. This stock is just incredible. Everyone else wanted to go ask, when we got to New York, all the other people were wanting to ask Mike about YieldMax. I walked up to him and I asked him about Riser. No one had never even heard about Riser, but Riser's incredible. And I think he likes Riser too. I mean, Riser's incredible. But I mean, it's pretty impressive, right? I mean, now the reason it's so impressive is because that's a 3-year, moment in history right there. Well, during those 3 years, it's been the perfect set of conditions for Riser. The next 3 years may not be as good of a set of conditions, but that is a well-managed, I think, in a fund with a solid methodology. So, but also a lot of people, I mean, don't sleep on this one either. THTA. I know some people don't like it, but it's kind of like a bond type fund. They make a real safe-ish type return. Now they had a little problem in August. Their NAV, got hit a little bit, but they've got it back. If you've held on, you're back to where you were. But those are ones that I know about, Riser, and but I'll try to look at some of those safe cash equivalent ones and do something on them sometime. But yeah, but just generally, my theory is on diversification, the more the better. Now, lots of times when you do that, it costs you money. If you look at the end of the year, you go, well, why did I listen to Max Convexity? If I wouldn't have diversified, I would have made more money. And that's what diversification does. It makes you make less money in a year like this year. I mean, that's the idea. That's what it typically does. You're gonna make more money. If next year is just like this year and you diversify this year, you're going to make less money than your buddies that are still, all in on FEPI. There's nothing wrong with FEPI, but I'm just saying that these tech stocks, or these AI and tech stocks, are doing great. Well, they're doing great, but the Riser, the ticker for Riser is RISR. So let me make sure on these comments. Thank you very much, Max. Got to go. Okay. Hey, Red Sox, I appreciate it. But in any event, I got to go too. I'm going to go clean the house. It's rained and it's been muddy the past couple of days here in Austin, and the dogs have been tracking mud in and out. But we finally got a dry day. I'm going to go sweep, vacuum, mop, strain up the kitchen, clean out the microwave, standard stuff like that. But I'm going to do that. And then at about 5, Big Dog's dad is done with work, and then Big Dog and Big Dog's dad and Jackson and me, we're all going to go up to the dog park and have a big time. So I want to get the house cleaned so I can relax tonight and don't have to do that later. But anyway, okay, so tomorrow's the end of the month. I try to get a lot of videos out right around the end of the month because it's when they cut off the pay, and my channel has been doing terrible. Absolutely terrible. This is the worst month I've ever had, but I don't feel like it's doing bad because I've made a lot of good friends with you guys on Discord, and we've done a lot of cool things. I'm just not maximizing for clicks very well, but that's all right. That doesn't have anything to do with you guys. But in any event, it does mean that right around the end of the month, you're going to get to see some more videos. So I have a really good one I'm going to try to put out tonight. If you haven't watched the one about how much YouTube pays me, go watch it. It's not that bad of a video. It's kind of boring, but I show my family and my dogs and stuff. But then at the end of it, I talk for about 20 minutes about the best practices. But, if you've been listening to me for a while, it's nothing new that I haven't said before, but you guys might like it. But go watch that. Go watch my video tonight. It'll probably be out around 8 or 9. That video is going to be comparing retiring on YieldMax with retiring on Curve. It's going to look back and see, how you would have done if you'd gone all in on Curve last year versus going all in on YieldMax at the same time. We'll kind of do a little compare and contrast. So I think that ought to be an interesting video. I'm hoping that interests you guys. And then tomorrow's the last day of the month. I'll probably also have another new video out tomorrow. So if you have any suggestions, or I have tons of stuff to do. I have a bunch of new funds to review. I'm going to probably have a new fund review that'll come out tomorrow. So anyway, I appreciate you guys watching all that, and I appreciate you guys for being here. If you guys don't have any more questions, which it doesn't look like you do, I'm going to get out of here, and I'm going to go sweep, mop, vacuum, scrub, all that kind of stuff. All right, guys. Thank you very much. Have a good day.